Wednesday is October the 23rd, 2019. It's about 4:30 p.m. Perth time, 7:30 p.m. Sydney time, about 4:30 a.m. New York time on the Wednesday morning. So first of all, the issues last week with the computer, the screen freezing, I'm very sorry about that. I have figured out that I have one main computer with a bunch of screens leading off it, and I think I've overloaded the system a bit. It seems to be working fine with all my software programs, but for some reason the videos are one thing it can't handle. I have a new computer's arriving in a couple of days, so bear with me. I think today should be fine. I sorted something else out, but as of, I think the Apple's just taken a bit of time to arrive. However, they should be here in a few days. Then we'll have a bit more powerful brand new setup, so it should be good. In terms of the markets this week, it's still range bound. Nothing's changed. I mean, it's been the same for many weeks now. Range bound market, false breakouts, hard to trade, and I'm still, I hardly have any money in the market. The trades I'm taking much smaller position sizes than normal. I think that's the way that momentum and breakout traders need to play it while the market's slow and while the market's range bound. Here's a chart of the Nasdaq. If this index can break out above this high and trend up and hold above the high and then start trending up, then obviously I'm going to be looking at piling into all the relative strength stocks that are breaking out of bases with it. Okay, if you look at a chart of the Aussie market, it's range bound as well. They're very similar looking charts, and so the world's just waiting, watching everything unfold, and the markets are just chopping away. And so as I've said in the last few weeks, I've been very selective, and I'm really just looking for relative strength and for which stocks are setting up in nice bases ready to move when the market decides to have an upswing. Okay, the whole trading game, it's only really 3 months of the year where the market's moving well, 9 months of the year where it's a bit dodgy, and so most people can't handle that. They want to be in the market all the time. I'm afraid that's why most people lose money consistently as traders. Okay, obviously investing's different. You've got a long-term time horizon. In terms of what's going on, the indexes aren't telling the story. As I've mentioned before, there's still a rotation away from software stocks. The software stocks are just taking a breather. There's many really, really good companies mixed in there with the software stocks, and so I think they'll be back, but they're taking a breather for now. And a lot of these stocks, they've fallen a long way. However, I think they can fall a lot more. Here's Twilio, which I've talked about a bunch of times. I've been short it. I'm not short this second, unfortunately, but it's fallen a lot, but it's currently in about $100 bucks. I mean, seeing it fall down to $60, $63, it could do that very quickly. So I think bag holders of these things, once they start falling, it's a bit silly. That's why we have stop losses and plans in place. So I certainly wouldn't want to be long Twilio or any of these old leaders in the software sector. Once again, the stocks are holding in there. I spoke last week how I'm long Nike and I'm long Lululemon and I'm long Apple, and they're all performing well and going up, and I'm pretty happy with those three positions, so I'm just letting those run. And if you look where the money is leaving the software sectors, where's it heading? It's obviously heading to the Nike and the Lululemons and the Apples, but it's heading to other places too. JP Morgan, it's definitely heading there. So we have a bit of a flight to value, I guess, if you can call it that, and other companies too. If we look at VZ on the New York Stock Exchange, Verizon, it's making new highs as well. So there are some stocks that are leading and breaking out, and I'm not in Verizon or JP Morgan's, but that's certainly where some of the money seems to be finding itself at the moment. Okay, so with back to the software stocks quickly, what I'm really doing is my favorite ones are in the States. I like Zendesk. That's the wrong chart. I like Zendesk, and it's currently plummeting, and I think it can fall a lot more. If I see pure panic on the streets and this thing just plummets and has a few 20% down days, and we can get down towards $46, it might be when I start looking for a reversal. I'm not just going to blindly catch a falling knife, but if I see some sort of reversal candle, and I'll try and trade the breakout from that pivot or pin bar, whatever I see. So if I end up doing that, I'll follow through. And one of the other software stocks I really like is, because I use their product a lot for conference calls and for just chatting to people, is Zoom. And This company is used by a lot. They have revenue. It's kind of crazy valuation, but I'm just keeping an eye on these things, and if they can just fall a hell of a lot, and then one day they're going to do it, reverse, and I'm going to keep an eye on for reversal signals on just the leading software stocks I like. Shopify's in there too with Twilio, so Zendesk, Zoom, Twilio, Shopify, the ones I'm just watching every day, and if they show signs of bottoming, then I'll jump in. Now, looking at the Aussie market, there's just going to run through a few of the main stocks because it really is, different things, twofold market. So let's just look at some of the big banks. Macquarie Group looks strong. Okay, I'm just going to whack the moving averages back on. I don't know why it's not there. Okay, it's above all its moving averages, trending up near highs here, but there's nothing weak about that chart. If we look at some of the other big the big banks, CBA is also looking strong. It's got some resistance above it, but it's got way more support below it than it has resistance above it, and it's looking strong. If we look at NAB, you're looking equally strong. If we look at CSL, which I talked about, last week, looking really strong. I'm still in that. And if we look at stocks like Sydney Airport, a very popular stock, it's looking great too. Okay, so there's certainly sectors and stocks in the Aussie market that are looking really good. But let's just have a look at some of the miners, right, which really aren't looking as good. BHP, it's below all its moving averages there, looking pretty weak. Rio, equally just looking weak. Woodside, it's been looking weak for ages, but it's still looking weak. S32, been trending down for ages, and Fortescue, I guess, is bucking that trend. So Fortescue is certainly looking stronger than the other miners, and and if we look at let's just look at the mining ETF QRE. It's looking weak. It's below its moving averages. So certainly not taking up any new positions in the main miners. I'm watching Fortescue closely, but it just goes to show the money at the moment is filtering in towards financials and a few other stocks. Some retail stocks are doing well as well, but it's really not filtering to the big mining companies right now. And I'm pretty happy to stay on the sideline in terms of the individual trades in mining stocks. Okay. Some other cool things. I'm going to get to a scan in a second. Just to show some stuff I found. However, another chart stock I'm watching just for long-term investing stuff is Google. I'm just going to put on a monthly chart of Google and get rid of all the moving averages. So obviously Google's been one of the best companies for many years now. But this is a monthly chart. Google's been basing for since when's this? July 2018, just going sideways, and so. I'd love to just blindly buy this, but I think I'm going to just be patient and wait for this to see how much longer it can base, and then if it can have a breakout of this 1296 level, then I'm going to look to invest in Google for the long term. Okay. Now moving on, one of my favourite scans I do, which I've talked about, is a tri-point resistance scan. So for any new traders out there, the way you get to it is just go into this search button here, press scan for patterns and events. Now I have a scan set up called Tri Resistance Weekly, I call it, and all it does is it has ascending triangle and tri-point resistance scan on weekly data for ASX, and I do this scan quite a lot because it finds I think it finds some really good bases, especially in the cheap stocks. It's pretty rare that it's going to find it set up in a really expensive blue chip or anything, but it usually in the penny dreadful. So then I just scan through it. It only usually comes up with a couple. So RAM, I'm not overly interested in that. I'll stick to the daily, back to the weekly. It's to me that just looks like it wants to go broke. TGA Thorn Group. Okay, this one is the one that I found earlier, and so. We have a weekly chart here with the tri-point resistance at here at 0.305. It's hit that 3 times, and we have massive volume and good on-balance volume. So then we flick to the daily and just check it, and I certainly like the way this base is forming. I like this volume bar and the unbalanced volume and all that sort of stuff. And so here's a decent base forming in a relatively cheap stock. And then my next step would be I just do a bunch of reading on Thorn Group, and I've done that. I'm not going to bore you guys with it. You do your own research on it and decide if you want to take the risk or not. But I don't, I've got to admit, I don't spend ages reading up about every trade I take. It depends on the setup, but I do a lot of reading on certain stuff of various companies. For I don't know I don't know why sometimes, to be honest, but I think it does help to have an idea of the company you're trading. But at the end of the day, you need a plan. You need an entry level, exit level, and the fundamentals is pretty irrelevant quite a lot of the time. But the reading, I enjoy the reading anyway. So then I also do the tri-point resistance scan on daily data. No, I think the weekly data, it's way better. There's one other stock that came up, but yeah, that's not looking too interesting. So it was just the one. Usually you only find one. Sometimes you find none that's interesting, but it's a really good scan. I think the tri-point resistance on daily data is also a good scan. So I'm just going to get to that. Let's just change this to daily data, tri-point resistance on daily data. So let's just have a quick look at what this finds, and I think there was just a couple I quite like the look of. I mean, this obviously it finds a lot of setups that I'm just not interested in whatsoever, such as that one. This one's cool. We have big volume here. We have a tri-point resistance up here. I mean, this stock, there's a lot of resistance everywhere you look on this, and so for me to trade that breakout, I'm going to need to see this really, really tighten and just give me a really, really perfect tightening pattern. I think if we just keep looking at how much resistance it's just got a lot of barriers right above the breakout level. It's going to be prone to false breakouts, but I'm still going to watch that. I'll whack that in a watch list, and if this can tighten up and give a really nice tightening base here, then it could be okay. And then I just usually scroll through the tri-point resistance on daily data. That one looks kind of interesting too. So we've got rising bottoms here, and and a decent resistance line. Once again, there's a bit more resistance above it, so I'm going to want to see that tighten up really, really nicely if I'm going to consider that. It's certainly not looking good enough at this stage. Okay, so all right, now just moving on to a few other stocks that are setting up. Okay, so RUL went today, so I wish I did the talk very early this morning, but anyway, that's the way it goes. We'll see if that one can follow through. I'm watching SEI base. This came up in a Davis box scan, so it's looking cool. Watching that one. DCN has a decent tight little base here, just right here that has been tightening up and it's breaking out now. So I thought that one was cool. AGL, it's just been bottoming for a while, and it's had a kind of false start and then back in the base and then chopped up. So I've got a position on this. I was carrying a loss and lost for a bit, but anyway, it's up and away hopefully. So, and then one other one that I've been just looking is FOD. It's been in a pretty bad stock and been in a downtrend for ages, but okay, we'll see how it goes. Now, a few of the other stocks that I've been talking about lately, let's just go to, that was not it. I forget the code, I apologize. So let's just go to one I remember. So CM8, I'm still in. I had a bit of a scary day here on the 18th, but I'm not watching intraday data on these stocks, so that didn't whip me out. I'm still in it and just being patient. So we'll see how that one unfolds. Okay, so one of the other ones I talked about last week was ATL. So I got an incredibly bad fill on ATL, and I only got filled on a tiny, probably 10% of what I wanted, and I think a lot of people buy on this day. So I scratched the rest of the 90% order there. So I've got a tiny position on here that I'm just letting play out. But obviously we've had a bit of a false breakout here, and it's just a matter of just being patient with that and seeing how it plays out either way. And one of the others was IFN, Infigen Energy, which we've had a false breakout too. So it's been a tough little patch for trading, and this is why when in a range bound market, I'm super careful, and my position sizes are pretty small at the moment. So, but this is trading, and you're going to go through good patches and bad patches, and you need to be patient. And statistically, over 100 trades, if you're going to win, say 55 to 65% of them, and let your winners run and cut your losses, you're going to make a hell of a lot of money. That's it for this week, and I'll be back next week with a brand new computer and all that goes with it. Cheers.